Good afternoon. Thanks for joining us. Today we have Sailfish Royalty Corp presenting. Executive Chair Akiba Leisman is going to do the presentation. You may remember him as CEO, but he's actually promoted himself recently, so I'll let him tell you all about that. And yeah, before we get started, there will be a Q&A section at the end. Feel free to put Q&A in the Q&A box at the bottom throughout. And this presentation will contain forward-looking statements. If you'd like to know more about those, you can check them out on the company's website, where this presentation is also situated. With that out of the way, Akiba, why don't you give us a little bit of an update on Sailfish, including the recent management changes that happened?
Sure. All right. Thanks, Deb. First of all, it was a complete demotion. I got myself kicked upstairs to executive chairman. It was Cesar Gonzalez that took the promotion to CEO. He apologizes for not being able to make this meeting. But let me go over a little bit about what Sailfish is, what we have, our history, which is actually kind of important, and some of the plethora of catalysts that we have over the course of the next 2 or 3 months that are really going to be changing this royalty company in terms of what we've had in 2020 versus what this is going to look like in 2021. So first of all, Sailfish is a royalty company. We have a few cornerstone assets, a single royalty that's right now in production that basically is sufficient to keep the lights on, pays for our G&A. It's a small royalty that Endeavor Silver owns. But in January, everything is going to change. For those that know me, I'm also the CEO of Mako Mining. We're developing what will be the highest grade open pit mine in the world in northern Nicaragua. And Sailfish has a 3% royalty on the primary San Albino project. Mako this morning announced production from its second mining bench, where the diluted grades coming out of the mine exceed 19 grams. So it actually ranked this amongst the highest underground mine if it was underground, but this is actually coming out from an open pit. So this is going to be truly extraordinary in terms of economics. They're going to be coming from the San Albino mine, and by extension, the initial 3% royalty. That'll be the principal cornerstone asset that Sailfish owns right now. They'll be starting to generate cash as soon as production begins early next year. Now, secondarily, we have a cornerstone royalty, an effective 3% royalty on private equity firm's Spring Valley mine in Nevada, the best jurisdiction that we would posit in the world right now for gold mining. At one point, this had a 5 million ounce resource in oxide. It's currently going through a de-risking stage from this private equity fund. It is our views that at some point in this gold mining cycle, that asset is going to be sold to a mid-tier or major, in which case we're going to have a 3% royalty that at one point was on a project that was specifying in excess of 250,000 ounces of production per year. So a true cornerstone royalty. We also have a royalty on one of Eldorado's assets that they've started to talk a little bit more robustly about in some of their public disclosures. It is our anticipation that Eldorado would be monetizing that asset to make this a more important asset for advancement for somebody else. Now, the other thing that distinguishes Sailfish from some of the other royalty companies that you may be aware of and some of the new ones that have started is that we are backed by a large hedge fund and private equity group, Wexford Capital. Wexford's also the controlling shareholder of Mako Mining. I used to work for Wexford, so I do know how they think. Wexford has been in the royalty business for quite some time. They created a royalty company called Viper Energy Partners that at one point had nearly a $6 billion market cap. At one point, when oil prices were higher, Viper was spinning out nearly $300 million per year of royalty cash flows from that royalty vehicle. Wexford also owns royalty companies privately in different parts of the energy market. And Sailfish was created in 2014 initially as a subsidiary of the predecessor of Mako to be their gold-oriented royalty company. And Sailfish went public in 2017. Now, the other thing about Sailfish, and myself, Cesar, Wexford, we are cut from the same cloth. We are investors at heart. The only thing that we care about is the long-term consistent performance of the equities that we have our fingers on, whether it's companies that we control like Mako or Sailfish, whether previously when we were working directly for Wexford, whether it was our portfolio companies themselves, the only thing that we care about is the performance of the underlying stock. And how we manage our companies reflect that. So Caesar and I do not draw cash salaries from the company. The only compensation that we receive, which is significant, is in the form of options. The intent is to have those options be revalued at substantially higher to make sure that we are compensated for our work. But we want to make sure, at least from a cash overhead perspective, these companies are run as tight as humanly possible in order for us to experience the real wealth creation, which is the performance of the underlying equities that we are in control of. Now, as I was mentioning, there are a very significant group of catalysts that are going to be transforming Sailfish over the course of the next few months. So I mentioned the fact that San Albino is going to be turning on. This is going to be the first cornerstone asset within the Sailfish portfolio that will start generating cash for Sailfish. So initially, there's going to be a 3% royalty on the San Albino mine. Like obviously, based on 19 grams a ton, it's going to be pretty significant, even if it's just going to start production at 500 tons per day. Mako recently announced a resource update that indicated a measured and indicated resource grade of 9.54 grams per ton in the open pit, which would make this the highest grade open pit mine on the planet. Management, i.e. myself, made a public disclosure as part of that resource update that because of the conservative modeling on that resource, we, and by we, I mean myself, as well as the gold standard of resource estimator, Steve Risterselli out of Mine Development Associates, we do believe that we can either meet or exceed those grades when they are being mined based on how that updated resource was modeled. But let's take 9.54 grams for a second and equate that at a 500 ton per day clip. That would mean that Mako would be generating close to 50,000 ounces a year of production. And by having 3% attributable to Sailfish, that would imply cash flows at these gold prices approaching US $3 million. And that actually will be on a after-tax basis based on the current structure of the royalty. But that's not it, is that Mako has announced a series of pretty robust exploration results on other parts of the property, and Sailfish has a 2% royalty on the rest of the property interest that Mako is developing right now in Nicaragua. The intent is to expand production from 500 tons a day to 1,000, thereby roughly doubling production over at the San Albino plant, of which Sailfish will be benefited through the 2% royalty that they have on the rest of the package. That's a big, big catalyst that will be happening for Sailfish over the course of the next 2 months as first gold pour begins in January of next year. Now, secondly, we announced the intent to spin off our exploration asset called GAVILAN to shareholders in a vehicle that we're going to be calling Swordfish Silver. So right now, GAVILAN is an exploration asset that we picked up through a fairly comprehensive merger that created Mako Mining, and then Sailfish was part and parcel to that deal as compensation for a royalty restructure to give them the 3% royalty that they have on San Albino and the 2% royalty that they have on the rest of the land package as part of the compensation to restructure the previously existing royalty. Amongst other things, Sailfish received the GAVILAN property, which is currently about a 35 million ounce silver equivalent resource sitting just up the road from Mexico's most prolific mine in its modern history, the Tayoltita project, the San Dimas project, the one that's owned by First Majestic Silver that's been in continuous operation since the 1870s, has mined in excess of 1 billion ounces of silver and over 17 million ounces of gold. We have very similar geology to that. Even though this is a 35 million ounce resource, the potential over at GAVILAN is substantially higher than that. However, it's an exploration asset. It does not belong in a royalty company. We do not believe in taking royalty cash flows, and then which are highly valued cash flows, and then using it to invest in exploration assets. So once we got the GAVILAN property, it was always the goal of spinning that out to shareholders. Now, one of the reasons why there's been little of a delay for us to actually get this out is that in the background, we're looking at populating the Swordfish Silver vehicle with additional high quality silver assets. We are in the very late stages of announcing what that's going to look like on very shareholder friendly terms to Sailfish. And once that full roadmap is announced, and once we have approval for the various regulatory bodies to facilitate that spin out, we are going to be spinning out that royalty vehicle to shareholders. So anybody buying a share of Sailfish today will also be buying a share of Swordfish that will be spun out at some point next year. Now, to get Sailfish to the level that it is right now is that, again, we went public with this in 2017. It was initially created in 2014 as a private subsidiary of a predecessor of Mako, but in 2017 we went public. In order to get heft, we acquired another publicly traded company, a company called Tocaninzhino Gold, which had effectively a 3% royalty on Spring Valley, which is currently being developed by a private equity fund out of Toronto called Waterton. Now, Tocaninzhino was an odd structure where they had a 3% royalty, but they also had a fairly substantive piece of debt over at their balance sheet that was owed to that private equity fund, Waterton. And that debt was convertible into either shares of Tocaninzhino or into a back-end right to about 45% of that 3% royalty. At the announcement of the merger and roughly a few days before the closing of the merger, that private equity fund wanted to be repaid. They used that as a tactic, if you will, because they didn't think that Tocaninzhino had the capital to do that. So Tocaninzhino took a bridge loan from the controlling shareholder, Wexford Capital, to buy out that debt piece from Waterton, and that eliminated the back-end right. So Tocaninzhino owned 3% of the royalty in its entirety without any back-end rights once the transaction to merge Sailfish and Tocaninzhino was effectuated in 2018. In order to facilitate the funding of that loan, Wexford put in a bridge loan that has since been refinanced through the form of a substantially oversubscribed rights offering that was taken prorated by Wexford, and then the rest of the shareholder base took a very large part of that 18 million Canadian dollars, where the vast majority of the use of proceeds was to repay the loan that existed over at Wexford. So currently, in terms of debt outstanding over at the Sailfish level, it's only about $3 million right now, obviously to the controlling shareholder, who's very supportive. And the remaining cash that we had from the rights offering is going to be used to advance the GAVILAN property to make sure that it is a technically compliant asset to be spun off to shareholders of next year. There's also a small tax payment that needs to be made to the Mexican government upon transfer of that. So we raise a little bit of additional capital to make sure that we have sufficient funds that are going to be used to facilitate the spin out over at Swordfish. And then the balance of our cash, we've announced this really since the establishment of Sailfish in 2014, and then certainly when we went public in 2017. If we have any extra cash on our balance sheet, we do not believe in war chests. We believe in giving that back to shareholders for a royalty company. There are some very valid investment objectives for operating companies. But if you are a royalty company, you should not have excess cash. The entire purpose of being a royalty company is because your structure allows you to have a lower cost of capital. So why have any additional cash on your balance sheet? It's basically there being as an anchor. So either we are going to be dividending out that cash to shareholders if we have consistent cash flow, which we won't until San Albino is fully up and running in Nicaragua next year. But currently, any additional cash that we have on the balance sheet that we don't need to facilitate any of our objectives gets repurchased. So we've been very active on the share buyback. We are going to continue to be very active on the share buyback. When San Albino turns on and we're generating nearly US $3 million a year just from that initial royalty, we're going to be even more active on the buyback, simply because the shares that we have right now, factoring to the fact that we have the Swordfish entity captured within our company right now, are so undervalued that it is literally the best use of capital for us at the company. So went over a little bit about the history of Sailfish, established in 2014 as a subsidiary of a predecessor to Mako. That is a long, winding history on how we got here. But in many respects, that was the first transaction that we did that established Sailfish as a company that eventually became the structure that we have right now. Royalty on San Albino. Spun this out in 2017 to shareholders on very friendly terms to the shareholders of the predecessor of Mako. So number two. Number three, we merged with Durango to get the heft and the structure that we have right now. Number four, we announced the rights offering to bring in other shareholders and cleanse the balance sheet after we took on the debt from Wexford to facilitate the repurchase of that Waterton debt piece to get rid of the back-end right on that royalty, and that we have Sailfish as the structure right now. The next objective in 2021, other than receiving cash flows from San Albino, is to spin off the Swordfish entity. And then what do you have left at that point in time? So you'll have a publicly traded exploration company, and then all the shareholders over at Sailfish will be allowed to participate in that. But then we'll have a royalty company that will have three principal royalty assets. San Albino turning on initially at $3 million a year, and then we expand to 1,000 tons a day. That would equate to roughly $5 million a year of cash flow at these gold prices. You'll have the Tocaninzhino asset, which would add at these gold prices based on the project that Eldorado has scoped out to another nearly $4 million a year of cash flow. And then you'll have the Spring Valley asset, where if this is going to be scoped out like it was back when this was an asset that was owned by Barrick Gold and a minority joint venture partner over there, that would equate to well in excess of $10 million a year of after-tax cash flow, assuming the U.S. corporate tax rate stays the same post-election. That will allow these three principal royalty assets to have after-tax cash flow in the high teens, maybe even as much as $20 million a year. And that's not even including the attributable value of what's going on the Swordfish spinout that we aim to effectuate sometime early next year. And then what do we do? So you may have noticed, everybody over here is very familiar with the royalty space. We have the big guys that have been around for a long, long time. So they've been very, very successful. And obviously, there's a lot of companies that attempt to emulate them. And you may have noticed that there's been a lot of new royalty companies that have been generated over the course of the last 3 or 4 years, inclusive of 2020. There's been a plethora of new publicly traded royalty companies associated with it. So what do we do? Are we going to be another RAN, and also RAN in the royalty space? As I mentioned earlier, we are cut from the cloth from investors. It's always easier for us to make investments at the bottom of the market than it is at the top of the market. So the time for us to deploy capital on anything that we did, whether it was on Sailfish or predecessors of Mako, or even things that we did when we were working over at Wexford as portfolio managers, we were always in the main deployment of capital during the bear market. That's not really what Sailfish is going to do. We'll never pass up a good deal, right? So if a good deal comes across our way, we'll have the capital to finance it and be able to do it. I am not optimistic with the level of competition that exists in the space that we are actually going to be acquiring a lot of additional royalty assets. So what do we do? What do we do as a royalty company if that's the case? Well, it's very simple. One of the reasons why we're spinning off Swordfish is to make sure that this royalty vehicle is as clean as possible. In order to do what? Very simple. Either to merge with another royalty company of similar size and scope, or to sell ourselves to a larger royalty vehicle, crystallizing the value for our shareholders. The royalty business is definitely one of the few businesses where you can unequivocally state that the bigger you are, the more diversified you are, the better. It's not necessarily something that's true for the operating side of the business, but from the royalty side of the business, it is unequivocal. And then one of the reasons for the management changes that have happened, where I kicked myself upstairs to executive chairman, I put the former corporate development and my former partner over at Wexford, Cesar Gonzalez, as CEO of the company, who's also the VP of Corporate Development over at Mako, is to make sure that we have roles where we can focus on what we need to do over at the operating side of the business in order to facilitate the sale or merger of Sailfish when the time is right, post spin out over at Swordfish. So it's part of our objective over here that we are going to be part of a larger company. And that can go in, as always, in any of three directions. It could be us acquiring another smaller royalty vehicle, keeping the management as the status quo, it could be merging with a similar size royalty where we don't mind, so long as they're good stewards of capital and good management over there, we don't mind giving the keys to somebody else. And we've demonstrated that continuously over our careers over the last 10 to 15 years. And then likewise, we certainly don't mind selling this royalty vehicle once it's cleaned and once the attributable value of Swordfish is recognized by the market to a larger royalty group, in which case we can crystallize the gains from this investment for Wexford, for ourselves personally, and certainly for all the other shareholders that exist over the company today. So where do we sit right now? We have 75.7 million shares currently outstanding, and that's going down quick. We have an active buyback. Anytime that there's going to be a place in the market where somebody needs liquidity, we have provided that for it. We think that any share that we're buying at these levels is a steal, because I don't think people are thinking through what the attributable value of Swordfish is, and certainly not thinking through what the three cornerstone royalties are worth within Sailfish right now, and we will continue to do that. Currently have a couple $1 million in cash, and like I said earlier, the $3 million in debt, which was reduced from US $12 million of principal and about $1 million of accrued interest of debt that was taken on from Wexford in order to facilitate the repurchase of the debt from Waterton in order to eliminate the back end right from the Taraco Spring Valley royalties, such that we now have a 3% unencumbered royalty on one of the biggest undeveloped mining projects in what we think is the world's best mining jurisdiction in Nevada. So with that in mind, we can go over a little bit about where the assets are. So as I mentioned, our primary assets, Nevada, the Tocaninzhino project for Eldorado, and then the San Albino mine, which is going to be turning on imminently. The history of San Albino is that it was initially structured in 2014. It was a grossly encumbering stream that actually really rendered the principal San Albino asset unfinanceable. And it was a long history, long winding path of getting here. But the merger of the two predecessor companies to Mako changed everything. It allowed that asset to be advanced. And you can see it as soon as that merger was happened, as soon as the management changes happened over at Mako, we were able to deliver a mining project in the middle of a global pandemic and also a catastrophic hurricane that luckily did not damage our mine over the course of the last couple of weeks, such that we are going to be pouring gold in January 2021. That will be the principal first asset that we have. The restructuring of that stream allowed all of that to happen. The merger of the two predecessor companies and the Sailfish restructuring changed everything for everybody. And by extension, it increased the value of, while it was a substantial stream before, it's a substantial stream on a project that was going nowhere. And now we have a 3% royalty or 2% royalty, depending on where you are, on something that will be in production. Now, in order to receive that restructuring, and Sailfish needed to be compensated, they got a bunch of stuff. They got cash, they got a couple of other royalty interests, and the GAVILAN property, which we're going to be monetizing through a spin out at some point early next year. Now, the Tocaninzhino royalty, that was actually acquired privately. It was actually the facilitator of the going public transaction that we experienced in 2017 over at Sailfish. You actually sense a change in the dialogue by Eldorado. They've been very, very quiet over the course of the last year and a half or two about the Tocaninzhino asset. And then in their last corporate update, they did acknowledge that they're going to be trying to monetize that. I don't think Eldorado has an intent to develop the Tocaninzhino royalty, a fully permitted project over a 2 million ounce reserve, very high grade open pit mine in the Tapagos region in Brazil. And then once a group with the appropriate amount of capital support comes in, it's actually a enviable project to have, a fully permitted, potentially close to 200,000 ounce a year producer, of which we have effectively a 1.5% royalty on. And then there's the big one. Now, Waterton, and we would do the same, so this is not a criticism of Waterton themselves, is that have been quiet about the development of Spring Valley. Having come from a private equity background, having seen what's gone on with the gold cycle, whether it's going up or even the volatility that we've experienced over the last couple of weeks, we feel the pressure to do something. And I can put myself in the shoes of the portfolio managers over at Waterton. They will feel pressure to do something to advance that assets, to make sure that this part of the cycle, and we are in a cyclical business, that this part of the cycle allows them to monetize what is effectively, actually unequivocally, the most important asset within the Waterton portfolio. So I don't think they're going to miss the opportunity to sell that to a mid-tier or major mining company. And if that happens, the second that this is owned by a mid-tier or major, instantaneously, you're going to have to start valuing a royalty on Park Avenue level real estate in the gold mining community that has the ability to deliver well in excess of US $10 million a year after tax, assuming the corporate tax rate in the United States stays the same as it is right now. And those are royalties that wind up being valuable to anybody. Those are the ones that actually have an extraordinary premium that's put on that. So we have the portfolio set. We have the plan to go and spin off our exploration asset to our shareholders. And really, once that happens next year, the objective is to get Sailfish into the hands of a larger company, either through merging with somebody of similar size to us, or to sell ourselves to a larger royalty company. And with that, I'll open up the floor to any questions.
Thanks, Akiba. So can you talk a little bit more on Gavilanes? So how close is it to the San Dimas mine of First Majestic, and more about any drill holes to date at Gavilanes?
This is about 15 kilometers as the crow flies. It's a stark road to get there. Actually, this is one of the things about Gavilanes. So if there's any criticism about Gavilanes, it's location in the sense of being able to run a reasonable size operation. So this is the kind of the way that we look at Gavilanes itself. 35 million ounces, I don't think you'd put in all of the support development capital to go and build a mine in terms of the underlying infrastructure that you can see there. That being said, the geology of Gavilanes is such that you could potentially get to a scale, and by scale meaning well in excess of 100 million ounces of silver. No question in mind that has a potential. And then once you reach that threshold, instantaneously this turns on as a viable project. So the way that we look at this is that it's not just a call option on silver prices. This is a call option on exploration success that we have over at Gavilanes. So to your question about what happened when this was sent over to Sailfish, we have a principal objective over here. We are not going to be a royalty company that, if we execute successfully, will be a high valued structure in terms of the cash flows that we're generating, and then use that to fund exploration. Exploration companies should fund exploration. Operational companies that don't have the same royalty premium should fund exploration. That we have no objection to spending money on exploration. But the second that you have these assets within a royalty company and you are using royalty cash flows to finance exploration, holy you know what, you are doing yourself a disservice. So as soon as this went into Sailfish's arms, there was no drilling. That being said, once this goes into Swordfish's arms, and Swordfish can go finance that through investors that want to invest in exploration, through a structure where it's more appropriate to do that, absolutely, the gloves are off, knowing full well that we actually have and assign a very high probability to us getting that, exceeding that exercise price for that call option on expiration. And once we get up to a certain level, GAVILAN has all the hallmarks of potentially being a world scale asset. We need to get to a higher threshold. This is not something that we're going to be turning on overnight. It's also one of the reasons why we're looking for additional assets to put in to Swordfish prior to the spin out. And we can announce exactly what those are going to be in pretty short order. But we are looking for assets that are actually more advanced on the development stage over there, such that it's less of a call option and more of a project development cycle. And when you merge those two together, where you have an asset that you can develop and an asset that potentially can be a true lottery ticket with a relatively high probability of success, that's how you make public companies that can be of an extreme value when all is said and done. But it's the biggest no-no in the business to take royalty cash flows and then use it to fund anything other than returns to shareholders.
Okay, well, I think that makes it pretty clear. Can you talk a little bit about the silver assets that you're looking at potentially to go into Swordfish along with GAVILAN? Can you expand on where you're looking? Is it all Mexico? Are you looking internationally?
Yeah, so I've been kind of hinting at this for a while. So obviously nothing is definitive until it's definitive. But the transaction that created Mako. So Mako, the owner of the San Albino mine that will turn on in January, that Sailfish has a 3% royalty on the initial project and 2% royalty on the exploration ground that existed in 2018, was actually a four-way merger associated with that. So you had the two predecessor companies for Mako. You had Marlin and Golden Rain. They merged to create Mako. Marlin had, and then Sailfish agreed to restructure the stream over there. And then as compensation for that stream restructuring to the 3 or 2% royalty that it has right now, it received some cash, it received the GAVILAN property, and it received a couple of royalty interests. And then Marlin, through a series of events, actually had a substantial amount of debt on the balance sheet. And then for the extinguishment of that debt to facilitate the merger of Marlin and Golden Rain, the asset that Marlin owned in Southeast Arizona in the United States, the Commonwealth Project, went to the controlling shareholder, Wexford. Now, what I can say about that is that Wexford has taken down the valuation of Commonwealth to that level that they had, which was substantial, to way below tangible book value. So Wexford owns 100% of the Commonwealth asset as it exists right now, and obviously nothing definitive. But what I can say is that Sailfish, I should say Swordfish, a subsidiary of Sailfish, is looking very strongly at acquiring that Commonwealth asset at substantially lower than tangible book value, like a tiny fraction of the value that went in at the facilitation of the merger between Marlin and Golden Rain, putting that into the Swordfish vehicle, not the Sailfish vehicle, putting it into the Swordfish vehicle and spinning out both assets simultaneously to shareholders. We are discussing that event with some key shareholders, some interested parties, and then obviously the regulatory agencies associated with that. If everybody is okay with it, we're certainly doing it in a way that will be friendly to Sailfish shareholders, then we'll go ahead with it. And that's kind of the discussions that are going on right now. Hopefully we'll be able to announce something more definitive on that front. Assuming that's the case, and it hasn't been fully decided on yet, but assuming that is the case, then you're going to have a developable asset in the United States. And the way that I would characterize it as a very high probability, very high value call option, not on silver price, but on exploration upside that we have literally next door to Mexico's most prolific mine in its modern history.
Thank you. So let's talk a little bit about the updated resource that came out Mako earlier. I guess it was in October. So we have a question from the audience. Can Mako expand to 1,000 ton per day with current reserve base? And how does management think about this?
Sure. So go over actually, let's go over the second question first on the ability to expand to 1,000 tons a day. In order for us to get to 1,000 tons a day, provided that we are mining relatively normal thicknesses of veins based on our very, very detailed and sophisticated grade control strategies over at Mako, which is characterized by the press release that went out this morning, where we're mining 19-gram material, where I don't even think we were taking more than 20 centimeters of dilution on either side of the vein. In order for us to get to 500 tons per day, forget about the 1,000, in order to get to 500 tons per day, and we're at normal thicknesses, which is a little bit thicker than what we've been mining over the course of the last couple months, we need 3 mining phases. So that's the number that everybody has to have in mind. 3 mining phases to get to 500 tons a day. Can we get to 3? Sure. Like you can see it. Can you get to 6, right? So going from 3 mining phases to 6 mining phases in order to go from 500 tons per day to 1,000 tons a day, I don't see it over at San Albino proper. So in order for us to get to 1,000 tons a day, even though we are fully permitted to do that, it will require a completely separate mine, which is coming from the exploration ground to the south of San Albino, an area called Las Conchitas, which is our most advanced project. We have an internal 3-dimensional model that's roughly the same size as San Albino as it exists, at least geometrically. A little bit too early to decide on or calculate grade right now. But the objective over there is to bring Las Conchitas in a mineable form, at least from a starter operation in the back half of 2022. And at that point in time, to be mining it at 1,000 tons a day, in which case you can have 3 mining phases here, and then assuming widths are roughly the same, and by all accounts, they roughly are, then you have 3 mining phases there, and that's your 6. So nobody should have any expectation other than in certain months or quarters where we have thicker than normal veins, in which case we can probably get to 1,000 tons a day, but that's just because of we happen to be in a thicker part of the zone versus what we're doing now, or even the average production over at San Albino. Now to the resource update, very, very simple what went on over here. So the reality of the geology over at San Albino is that there was a series of narrow veins. By narrow, on average again, so sometimes it's thicker, sometimes it's thinner. On average, the widths are 1.25 to 1.5 meters wide, right? So keep that number in your mind. But very, very high grade veins. The average vein is about 17 grams a ton. And then you have a hanging wall on top and a footwall down below that really have, they're visually distinct. You can see the difference between hanging wall and country rock, and footwall and country rock, and hanging wall and vein, and so on and so forth. The background grade in those is about 1/4 gram. So it's not economic material. Every now and then you're going to get like discontinuous little veinlets, which will be above ore grade, and then we can pick that out. Now, what the previous resource estimator was doing was essentially modeling everything as a single zone. You got the low-grade hanging wall, the high-grade vein, low-grade footwall, putting everything in a blender. Now, that does 2 things. The obvious one is that if you have low-grade, high-grade, low-grade, you put everything into a blender, you're going to wind up underestimating the grade of the deposit, overestimating the tons of the deposit. So that's kind of what happened, is that there was a 6-gram open pit before, when PE put together the resource estimate, and then our gold standard Mine Development Associates resource indicates a 9.54 grams in the open pit and a 10.2 global M&I resource for the projects. Grade went up by 50% from the 6 or 7, depending on any count, to the 9.5 or 10.25. Depending on how you count, to what exists right now. The more subtle aspect of modeling this as a vein as opposed to a single geological domain zone is actually the more important reason why things changed, is that if you are in high grade in our project, our mine, you are in high grade. But if you are not in high grade, you are not in high grade. So if you do not have very, very explicit geological controls and geostatistical controls on that vein, that narrow vein, you're going to wind up smearing the grade throughout the entire zone. and overestimating the amount of gold in the deposit. It was clear as day that what was going on over at P&E. I've been very vocal about the resource ever since I took over in March. There are literally no surprises in terms of what happened there. So there was some ounces of the deposit, a substantial amount of ounces of the deposit came out because of putting in strict geological controls to the vein, which is how we're mining it. We're selectively mining in and around the vein. The other aspect of it is that we have taken a much more conservative view on the underground. There hasn't been a single drill hole that's been put into this deposit below 120 meters since 2012 over at San Albino. And the previous resource estimator was taking optimistic assumptions of linking together holes that were very far apart that we do not do. When we put something on paper, we deliver that on paper. So this is actually the first resource estimate that I've done with the help of Steve from MDA. Is truly the best in the industry over here from scratch. Even the predecessors over at Mako, we had a resource over at our La Trinidad asset over at Marlin, which didn't work, right? And part of the reason why we're going through this diligent exercise so that we actually have a resource that's predictable, so we can put out press releases like we did this morning, is because of our experience on models that don't work. And now that you actually have, or we have the experience, or at least I personally have the experience of seeing what's out there, 80% of the resources that our industry have out there are complete and utter bogus. Like in terms of what goes on. Some assets are more predictable than others just because of the nature of the geology itself. But some of the optimistically lazy decisions that our industry is putting on resources is horrific. It is not a good representation of what good management should be doing. So therefore, everything on the underground, everything below 120 meters, that we do not have the sufficient level of drilling density to put in as an ounce that we have reasonable prospects of extracting, got tossed from the model. Everything that's in that resource model right now, I don't care if it's measured, I don't care if it's indicated, I don't care if it's inferred, I don't care if it's open pit, I don't care if it's underground, it's coming out. And we couldn't make that, that certainly could not have made that attestation to the previous resource estimate. And I would posit that if you go through your portfolio right now on the junior mining companies and you actually went through the resources that some of these companies put out and you did the work that we did, 80% of what you own right now could not make that same attestation either. So right now we have the gold standard of resource estimates out there. Mine Development Associates, Steve Risterselli, truly the best in the industry. And we can say with a straight face that 9.54 grams that we put in the measured and indicated of the open pit will be met or exceeded when mined. More importantly, we now actually have a geological model that we can use for other parts of our property. Las Conchitas, in terms of what we're doing right there, we're going to apply the same model that we have over at San Albino to there, because these hold together. We've demonstrated we have the ability to mine these narrow veins. So we have about a 280,000 ounce resource in all categories, open pit and underground, completely open along strike and down dip. We eliminated a substantial amount of the speculative ounces, which are still there geologically. We just need to drill it out. And then there's another 6.7 kilometers of strike to the northeast on a concession that we acquired in December that will allow us to continue mining just the San Albino vein for many, many years in our estimations, if we're lucky on the exploration side, leaving aside Las Conchitas, which we know today is a deposit on one of the 9 prospects that we have just on the Las Conchitas area that we've developed over the course of the last couple of years.
Akiva, could you talk a little bit about the visually distinct hanging wall and footwall and how that plays into how you plan on or how you are mining San Albino currently?
Yeah, no, it's I think essential. Like we went into this process thinking that this was going to be a real data-driven grade control strategy, where we have 4 layers of data-driven grade control. So there's the resource estimate, which are principally through PQ core holes. Secondly, you're going to have blast holes as you open it up, which are a reasonable proxy for geology, although they're not very good. at having an estimate for grade on structures as narrow as what we have. Then we have channel samples where we'll take in situ measurements on blasted material, and that's actually what we reported this morning, is on 4 meter intervals within section over there. We have the channel samples that we deliver, which very, very good estimate for grade on the post blasted in situ vein material. That's an estimate for what's in the stockpile. And then finally, for metallurgical purposes, what's going into the crusher and plant. We'll have a belt sampler that will take grade control data. Now, the punchline to all of this is that even though we have this fancy smancy grade control technique, our lab that we started to process assays on in May did not pass our internal QA/QC until I guess early October. So it was like about 5 weeks ago. So effectively, we were sending out all of these assays to an external lab. Now think about that for a second. The exploration market was starting to get hot this summer. So there was 4 or 5 week turnaround times to get assays. The stuff that we mined was mined out a month like before we got the actual channel sample assays back. And then lo and behold, when we're comparing what we actually put into stockpile versus what we got back to the lab, it was perfect. And the reason why it was perfect was because a geologist can see what's going on there. You can see what's country rock, you can see what's hanging wall, you can see what's vein, you can see what's footwall, you can see what's country rock, and he demarcates it with a can of blue spray paint. He directs our highly trained excavator operator to kind of peel off these layers of a layer cake until you get down to the vein. And we've been mining with sub 20 centimeter tolerances with only slight bits of guidance from our grade control strategy. So if you asked me this question like 9-10 months ago, I would have said, yeah, no, it's going to be a challenge, but we have the data to do it. Now that you're asked, now that we've actually opened up a few benches, we see what's going on here. The visual separation is everything. Like, and we're fortunate that I don't care if you're at the top of the deposit, at the bottom of the deposit. If it wasn't for the fact that we have this visual separation and we have it across our land package, it happens at Las Conchitas as well, I would have serious concerns with how we'd be mining it. The fact that a geologist can see what's going on, regardless of how much data we provide them on the grade control side, is everything. And that's why you're seeing us outperform on grade in terms of the model, and that's the model that's been upgraded by 50% from the previous one. We put out, inclusive of so just on gold, we put out 19.3 grams diluted material to our stockpile from an open pit. For an underground, that kind of ranks in the top 15 or 20 mines in the world. But for an open pit, that is so out of the realm of what exists globally right now, is that I don't think people fully recognize just what a special asset San Albino and the broader San Albino Murra land package is, and just how special having a 3 or 2% royalty, as the case may be with Sailfish, is to this company. It's always been kind of a head scratcher because it's very difficult for people to value something like this, because what was going on previously was not necessarily something that was run by credible management. And now you actually have something where this could wind up being an extremely valuable component to the Sailfish portfolio of assets.
All right. Well, I don't want to spend too much more time on San Albino, but I do, you noted in the press release this morning about Hurricane Ida. I think it's worth providing a little quick update. And then I do have a question from the audience that kind of takes it back to the whole Sailfish theme of this webinar. So if you go, Ida.
It was, I think I was walking to do early voting in New York, and I saw an update from the Weather Channel that there was a small hurricane developing in the Caribbean. I'm like, oh my God, this can't be happening again while we're building a mine. And then like our guys were on it. So we were doing every preparations to kind of accelerate some of our anchoring plans at our tailing storage facility. Everybody knew this was not going to be a wind event. So there was literally zero concern about the plant that's about 95% done right now. There was limited concern about the mine because we did make some a few months ago some decisions that that helped the mine stabilize, if you will. So I don't think there's any like main concerns about the mine. I was very concerned about our tailing storage facility. We intentionally waited towards the end of rainy season before we started to lay that plastic liner, because the last thing you want to see is erosion under that plastic liner while you're lining it. So first of all, this crew that we hired out of Peru have been fantastic. You should see some of the pictures that I put up on social media. It's acrobatic in terms of what they were doing. They're really advanced it prior to the hurricane, and then the preparatory work that they made from that those four or so days of warning that we had over here really held up extremely well. So that's and then plus we also invested pretty heavily on water management systems. So there was a lot of smart things that we did that was half the reason why we exited this unscathed. The other half was sure unadulterated luck. Like, we happened to have been like in the perfect location in terms of where this was in country. We were on the southwest side of the eye. We were not too far from the eye to get whipped by some of the rain bands that you might have been experiencing, Deb, in Costa Rica. So I think we wound up having like 8 inches of rain over a period of a few days, which is a lot. Some of the towns by us are flooded, so we're helping out where we can. You should see some of the pictures of our water intake. So we take the water from the river. That was nearly submerged. So the river probably crested 20, 25, maybe even 30 feet above normal. So certainly since Hurricane Mitch in '98, this is by far the record cresting of this was a significant storm. And then through good preparation, and nobody should ever underestimate how important luck is in this industry. We got lucky on this one. But we came out unscathed, no damage, no delays, and then just thank your lucky blessings on that. But hopefully hurricane season is now officially over.
I hope so too. One last question, and I think we could talk about the whole portfolio. How have the recent political and macroeconomic changes affected the posture or interest of prospective sailfish acquirers?
Like from a U.S. election standpoint, or from any...
I think he's meaning like all over Central America. There's been a lot of things that have happened this year. How do you think it affects a potential acquisition of the portfolio?
What I said earlier is that unequivocally royalty companies are better valued when they're bigger. I think it's true, and part of that is political diversification, right? So 5 years ago, Chile would have been a great place to be building a mine. Who knows what the constitutional referendum is going to look like? And by the way, that's coming from a good place. It's clear that this is very supportive of the Chilean community, and I wish them luck on having a constitution that everybody can buy into. But at the same time, there's going to be a lot of uncertainties on developing assets in a jurisdiction like that going forward. And that changes all around the world. West Africa is sometimes good, sometimes terrible. And so one of the ways to get around that is you do want to be in a fairly diversified portfolio. I would even include our assets, like the United States. It's sometimes it's great. Sometimes it's not so great. I think we'll see what the administration does. So there's definitely sense and sensibility that comes into having a diversified portfolio of assets in the royalty business. Geopolitics being one of many diversifying agents, if you will, or metrics that you need to diversify in order to have an attractive and valued portfolio. I don't think there's anything specifically about the U.S. election that I think is moving things in one form or another. I do think the global pandemic has shifted politics to the more populist side, which was ongoing really since the financial crisis and even probably before. So a lot of those things will be accelerated globally. I think that will be good for gold as a macro theme going forward. I don't think it really affects our business on a global macro basis. On a micro basis, because we're still a royalty company, we care a great deal about Nicaraguan politics, U.S. politics in Nevada, Mexican politics with respect to GAVILAN, and even Brazilian politics with respect to Tocaninzhino.
Okay, I think that's a fair summary. So just honing back in really on Sailfish and the investment opportunity there, can you sort of just wrap up by giving us a few of the catalysts, a few of the reasons that you think that there is a strong investment case for Sailfish right now?
Sure. So firstly, balance sheet got cleansed with that rights offering. Secondly, we're going to be spinning off Swordfish, which we think is going to be a very valuable silver co, certainly related as it relates to, on a relative basis, to the current market cap of Sailfish. And then once that's the case, we're going to have a portfolio of assets where one of the core royalties is going to turn on in 2 months. And eventually get to a run rate of about $3 million a year. And then from that, over the course of the next 2 or 3 years, to get up to about $5 million a year, you're going to have a royalty company that has a path over, let's say, 5, 6, 7 years to get to nearly $20 million a year in cash flow. And then an exploration asset that we think is a fairly substantive piece of Sailfish's market cap today. When you think about that, you really can't replicate what we have at these prices right now. And then once those two assets are separated from one another, people's mental math changes. It's actually very difficult for people to kind of see what the royalty company is worth versus the exploration company. As soon as that exploration company is out, people's minds don't need to think about it anymore. Then they can actually look at this as, what is Sailfish? What are those 3 core royalties worth? And what am I willing to pay? What am I willing to accept in the form of a merger? And can we actually get this up to scale through M&A, which we actually have we assign a very high probability of success once Swordfish is spun out.
All right, well, I think that's a pretty good summary. And thanks for taking the time, Akiba, to walk us through Sailfish. And yeah, I will make this available online for anyone who's interested that missed it. And thanks to the audience for participating.
All right, great. All right, thank you, Deb.
Thanks.